Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's July 24th here. We got a couple economic news releases to go over today, and we'll start out with the market manufacturing PMI flash. Kind of a mouthful right there, right? For the month of July. So in June, we had a 55.4 forecast. There was no forecast, but it did go up a little bit to 55.5. And these two indexes, basically anything above 50 is considered expansion or optimism. So obviously, it's still in that range there. Now, we got services industry from the same report or the same group, market PMI. We had a 56.5 for the month of June, but it dipped a little bit down to 56.2 in July here. Another item that didn't come up here was the FHFA home prices index. This is HPI. They measure single-family homes with a conforming limit, and they came in with a year-over-year of 6.4%, I believe it was, for year over year. But in the month of May, it went up 0.2%. So good with, of course, the West kind of leading the nation with the home appreciation growth in there. So let's kind of jump ahead here to the headline news. Stock market, it's a little mixed so far this morning. All the market was up earlier today. The Nasdaq was doing great because we had some great corporate earnings reported today, which Alphabet came in surprised everybody with a much better report than anticipated because they thought they were going to get hit hard with the $5 billion penalty on the Google phones from the EU. But they did not disappoint. They actually exceeded expectations along with some others. So far, Q2 has been a great reporting season for a lot of people, which is why the stock market has been going upwards in a great trajectory from what we're seeing. This is going to bring us to Friday with the GDP being released for the second quarter, and it's going to be amazing what we're going to see there. Some people are expecting as little as 4%, and I'm even hearing some people whisper 5%. So it will be interesting what it comes up to. I don't recall the economy ever being that hot before, so I'm sure maybe we've had in points in our history, but I just don't recall in my lifetime seeing that that type of numbers there. So it'll be interesting to see what we find out on Friday's numbers on that. Now, we also got affecting the market is some trade talk, but not only that, but the tweets that were being sent out by President Trump saying that tariffs are great. Basically, they're in the process of meeting the head of the EU tomorrow and discuss negotiations. And basically, both sides seem to be digging their heels in as to holding their stance on where trade is at. And of course, U.S. basically feels that that trade is unfair because we're not tariffing people coming into they're bringing their goods into the U.S. But yet it's okay. But those other countries are tariffing our goods going into those countries, and as a result, feel that's unfair. And of course, they feel that it is fair. So I guess it remains to be seen how we resolve that issue or or change that perspective here. So let's go ahead and take a look here and see what the bond market is doing. The bond market is currently up for the day. As you see, we had a pretty big drop yesterday, so we had a price for the worst. Now we're in kind of no man's land here because all these lines here from the 25, 100-day, and 50-day moving average are now above us, the ceilings, and now we got another pretty good big room here to drop further. So we can go drop another at least 25 basis points, which would be another at least an 8% or even further down. As you see, we touched down here at one point, which is another 50 basis points basically. So we could drop another 50 basis points, which could be another 0.25% in the rates hike here. But right now we're up about 8 basis points for the day. Now you have to change from where we left off yesterday, but if people didn't do the change for the worst yesterday, they may put that pricing in today. So pricing is about the same as where we left off yesterday is what we'll take into account that people did price in for the worst yesterday, and we really haven't had much change there. But again, if you guys are in a transaction, haven't locked in yet, you may seriously want to lock in because if anything, the pressure is going to be the downtrend here, and this will probably continue, and we could very well end up in this area here very quickly here. All right, so again, here's the Treasuries. As you can see, we're up, and we're actually about 2.95 right now on this. So again, we're at about 2.95, and this is where we got, as you can see, it broke above all hits ceilings, and now these are going to be floor supports, and we got plenty of room here for used to rise and push mortgage-backed securities down, which increase interest rates here. All right, so again, be cautious out there. If you guys want to get more data, just come over to Twitter. You can find me over on Twitter, posting throughout the day on where the market updates are, so you can get the latest there. Have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye.